Hello, my name is Hasibullah. I'm a tax accountant with MHE Financial Services, where we've been serving clients for over 15 years. We are located right opposite of McKnight Western train station. During tax time, we are open 7 days a week, Monday to Friday from 10 a.m. until 7 p.m., Saturday and Sunday from 10 a.m. until 5 p.m. Walk-ins only, no appointment is necessary. Today, we're going to be talking about the First Home Savings Account. This program is designed for somebody who's going to be buying a house for the first time. We did have a couple of programs in the past where we still have it, where the government lets you save for buying a house for first time, like the RRSP, where you get a deduction for it, and then you are able to borrow money from your RRSP up to $35,000 per individual to buy a house towards your first home, to buy a house. If it's your first home. Now the tax-free savings account, there's another program called tax-free savings account where you put money in. You don't get a deduction for it, but any growth that happens within the tax-free savings account is tax-free. You don't pay any taxes on it. This First Home Savings Account is a combination of both the First Home Savings, the tax-free savings account, and the RRSP. So it has components from both the tax-free savings account, which means any money that is invested in there, the growth is not taxable. You don't pay any taxes on it. The components from RRSP in the First Home Savings Account is that the money that you are contributing into it, you are able to get a deduction for it. However, there is limit. There is $8,000 limit for putting money into tax-free, the First Home Savings Account. So for 2023, the limit is $8,000 to a maximum of $40,000 in your lifetime. The eligibility for opening up a First Home Savings Account is that you are between the age of 18 to 71. You are going to be you are a Canadian resident, and you will be buying a house for first time, or you are considered an eligible or a qualified first-time home buyer. A qualified first-time home buyer is somebody who has not lived in a property that he or the spouse had owned in the last 4 years. So technically, if you are a first-time home buyer, this is something to consider. This would save you a lot of money. This would get you a lot of refund. And we will explain to you later in the video how you can double dip on this. How putting $16,000 into RRSP can get you a refund of $8,000. We'll explain that later in the video. So first of all, this is First Home Savings Account is the newest registered savings account that the government is offering. From 2023, it started. You are able to contribute $8,000 in 2023. That's the annual limit. If you open up an account this year and you did not contribute into it, you can carry forward that $8,000 limit to next year and do a maximum contribution of $16,000. The maximum amount that you can transfer, the room that you can transfer, is $8,000. So let's say, for example, if you open up a First Home Savings Account this year in 2023, and you contribute $2,000 into First Home Savings Account this year, then the $6,000 extra limit that you have, the room that you have, you are able to carry it forward to next year. And then next year, your room will become $6,000 from the prior year, plus the $8,000 for the current year, which would give you a room of $14,000. So if you open up a First Home Savings Account and you do not contribute anything that year, you are carrying forward that $8,000 to the next year. And then you can do a contribution of $16,000 the following year. You will have to open up the account to get that carry forward going. If you don't open up an account, you're not carrying it forward. And the reason the government has done that, because there is also, as soon as you open up the account, it starts ticking, because you can only have this account open for 15 years. As soon as you open up the account, you will have to buy a house for first time. You have to make the withdrawal within that 15 years. So that's why the limit starts ticking only after you open up the First Home Savings Account. The investment within the First Home Savings Account is tax-free. You don't pay any taxes on it. You can invest however you like. You can buy GICs, you can buy a mutual fund, your investment advisor at the bank would be able to give you a lot more information about those investment. You can invest in however you like. Let's assume you are going to be buying a house next year. Okay, in 2024, you are looking into buying a house. The first home savings account window of contribution is from January 1st until December 31st. The contribution window for RRSP is different, okay? But the contribution window for first home savings account is always a calendar year. So we are going to look into double dipping, okay? So you are planning on buying a house next year. You have room in your RRSP to put money into. So then what you can do is you can put $16,000 as a contribution into your RRSP first. So you will be putting $16,000 into RRSP. That $16,000 you will be able to take a deduction from your income tax, which would get you $4,000 refund if you are on a 25% tax bracket. If you are on a higher tax bracket, somewhere between 50 and maybe 120, it's gonna get you 30.5% refund, which would be $4,880. If you are on even a higher tax bracket, let's say you're making over 200,000, you would benefit 43% on that $16,000 of contribution, which would get you $6,880. This, I'm talking about the RRSP. So we are contributing into RRSP, and our aim would be to get as much refund as possible for making those contributions. So by putting $16,000 into RRSP, we are able to get $16,000 from, we are able to get $16,000 as a deduction in our income tax, which is gonna be lowering our total income, which is gonna be lowering our net income, and therefore getting us a refund of at least 25%, because that's the lowest tax bracket of $4,000. So I'm getting $4,000 refund from putting $16,000 away into RRSP. I haven't touched my first home savings account yet. Because I can transfer $8,000 limit to the next year, I would open up a first home savings account this year. If I'm planning on buying a house in the next little bit, I will open the first home savings account tomorrow. I want that thing to be ticking from tomorrow, because yeah, I know there's 15 years of limit, I would have to buy it, but I'm gonna buy a house in a year, 2 years, 3 years, 4 years, maybe 5 years. So I want that limit to start ticking as soon as possible. That way what I'm doing is my next year's limit for first home savings account will become $16,000. As long as the money has been there in my RRSP account for 90 days, and obviously I do qualify to withdraw it as a first-time home buyer, so I'm buying a house for next time, the money that I contributed the prior year has been in the account for 90 days, which means now this becomes a qualifying withdrawal because I'm buying a house. I'm going to withdraw that $16,000 from my RRSP under the first home under the home buyer's plan. I am allowed to withdraw up to $35,000 from my RRSP towards the home buyer's plan. I am withdrawing $16,000 that I had put in last year. $16,000 I'm gonna withdraw, and I will put it in my first home savings account. Because the act doesn't say the minimum number of days money needs to be in the first home savings account. It does say about RRSP that the money has to be there for 90 days. The money has to be there not more than 30 days after you buy the house. So you have to make the withdrawal within 30 days after you buy the house. But for first home savings account, it doesn't say for how long the money needs to be there. So even if the money is there for a day, that is my qualifying withdrawal. I can put the money into first home savings account and take it the next day, which would give me a deduction again next year. And that deduction of $16,000 will get me another $4,000 into refund. And given that I'm on the 25% tax bracket, if I'm on a higher tax bracket, if I'm on a 30.5% tax bracket, that's another $4,880. If I'm on even a higher tax bracket of 43%, I'm getting $6,880 from contributing into the first home savings account of $16,000. So what I'm doing, I'm putting the money into RRSP first. That's giving me 25% refund, $4,000. When I'm ready to buy the house, as long as the money has been there for at least 90 days and I am a qualified home buyer and I'm buying a qualified home and this is my first time home, I can withdraw money from my RRSP. I can withdraw that $16,000, maybe more. Hopefully that money has grown. I can withdraw that $16,000, put it in the first home savings account, and withdraw it the following day. That would give me a deduction in my 2024 taxes, which would get me another $4,000. So by contributing $16,000 into RRSP, withdrawing it from RRSP, putting it in first home savings account, I'm actually getting $4,000 refund from the RRSP contribution, $4,000 refund from the first home savings account contribution, which is a total of $8,000 refund by contributing $16,000 the way I said. $16,000 first into RRSP and then $16,000 later into first home savings account. It does sound complicated, but it's not. Because think about it this way. You're putting the money into RRSP first, and you are able to withdraw it under the home buyer's plan up to $35,000 from your RRSP. Because you only have $16,000 sitting there, you're withdrawing $16,000 from your RRSP. Again, I would mention that the money needs to be there for at least 90 days before you can withdraw it. In the first home savings account, there is no time limit. There's no set time limit. So even if that fund is there for 1 day, that gives me a deduction in my income tax, and that also becomes a qualifying withdrawal. So $16,000 can get you $8,000, and who said you cannot double dip? Now this is tax advice that you can take on. You can let your friends, family know about this. This is a great way of managing your down payment, because if you're buying a house in Calgary, now the average house is over $500,000, you are going to be putting at least $25,000 in down payment, 5%. If you're putting 20%, you are looking at $100,000. So you might as well take the tax incentive that the government is allowing you of putting money into RSP, and then also putting money into first home savings account. So if I'm talking about a couple can double up their contribution, both in the RSP and both in the first home savings account. If you have any question, reach out to me. I will try to explain a little bit better, maybe in one person. You are more than welcome to come in for a one-on-one consultation in my office. Again, my office is right opposite of McKnight Western train station. We are open usually Monday to Friday from 10 to 6. But during tax time, we are open 7 days a week. But you do have to open up the first home savings account this year in 2023 to get that limit, $8,000, transferred over to next year if you are planning on buying a house next year. We do offer services in multiple languages in our office. We have employees that speak in Hindi, Urdu, Bengali, Tagalog, Mandarin, Cantonese, and Arabic. So whatever language you need help with, we are there for you Monday to Friday from 10 a.m. until 6 p.m. Saturday, Sunday, we are closed, but during tax time, we are open 7 days, Monday to Friday from 10 a.m. until 7 p.m., Saturday and Sunday from 10 a.m. until 5 p.m. Thank you very much. Thank you for watching. And if you like this video, please do share with your friends or family. Thank you.